Good afternoon. This is Jim Barlow with OakTree Premium Finance. Happy to meet with you to explain my transforming life insurance product. Let's get started. I've changed a few things if you attended some, a little different approach in some ways. Well, for centuries, alchemists sought to transform lead into gold, unlocking wealth and enlightenment. I'm going to show you how life insurance can be transformed into a powerful wealth building tool. By the end, you'll have tools to explore this strategy and become a modern alchemist yourself. Welcome to the new alchemy of wealth creation. My wife's name is Barbara. We've been married 52 years. We've been blessed with 7 children, 28 grandchildren. I graduated from BYU, where we're devoted fans. I got a week off. Next Saturday is our next game. I worked as an investment advisor for 35 years, sold my business, retired, and started this legacy company, as I call it. Our passions, we love to travel. We're leaving in a few days for just a road trip. We love to visit family, loved ones, family vacations. I read a lot. I attend plays. We treasure time with family. We serve in the temple and strive to be disciples of Jesus Christ. Above all, I like to do good. I like to help others. Picture at the bottom is our every other year bicentennial. Well, that's the wrong word. Biannual. We have our biannual family reunion. The numbers on the jerseys is the number when they join the family. I'm number 1, Barbara's number 2. I tried to talk her into a number change to make her number 1, but she wouldn't let me do it. Anyway, that's the size. It's grown since then. We'll be meeting in 2026 at a reunion up in Bear Lake. You know, alchemy, alchemists. There's a lot of exciting things. This is nothing more than looking for a better way. We live in an exciting time. The internet, AI, smartphones, cloud storage, online retail. I'm using it all. Well, I guess I don't have a self-driving car yet. But all this area is amazing. I love it. So transforming life insurance to a powerful wealth building tool. We're going to blend life insurance, growth strategy, and leverage into one powerful alchemized approach to expanding wealth building. I came familiar with this company a few years ago, a company in Texas called NIW, and they built the strategy. They gave it a name called Kaizen. Kaizen is a Japanese term meaning continuous improvement, and I really like it. Their buzz line is more money, more protection, more confidence. I believe you'll see all 3 of those things as I explain it and give you the details. So if you could design your own retirement plan, put in whatever features you want, what would be the features you write down? I gotta have this, gotta have that, gotta have this. Well, let's write down a list. If there's anything that you think of that I miss, text me, email me, say, what about this? Why didn't you add that? So first, tax deductibility. Oh, that's a good one. Putting money in IRAs and 401ks, tax deductible. I like that. How about employer or matching funds? up to 5%. They'll match dollar for dollar or 50% or whatever. I always tell my clients, take all the free money people are willing to give you. Makes sense, doesn't it? That'd be a good feature. Tax deferred growth. Well, we get that in IRAs and 401ks. I want tax deferral. Yeah, that's a good thing to have. Market linked growth. I want market returns. Yeah, I want a good return. How about no downside market losses? Well, now we're starting to dream a little bit. Can we be in the market and have market linked growth and with no downside? Well, we're putting our laundry list together. The things we'd really like, we would like no downside. Tax-free retirement income. Well, sure. We'd like to have tax-free. Why not? We're putting anything we can think of. No required minimum distributions. As people retire, as they get older, come to an age, they've changed it a couple of times, but when the government says we're requiring you to pull out so much a month per year, required minimum distributions, none. You'd like to eliminate that. Liquidity, I want to be able to get at it anytime I want, for whatever I want. Penalty-free access for emergencies or opportunities. Oh yeah, you cash in your 401k or your IRA and you're under 59 and a half, you've got big penalties and taxes. Yeah, I want to eliminate that too. I want to use the funds for retirement, for business, major life events. I want to use it for anything I want to or need to, not just retirement. Creditor protection. Oh, I like to have an account that's protected so the attorneys don't go after my money. Creditor protection. Simple, low maintenance design. Oh, so many investments are complex and have risks involved. Simple, low maintenance design. Well, how's that? A good laundry list? Would you, again, email me, text me if you see something I should add to that list. So Kaizen, that was what I showed you a little early, just this product. Does Kaizen meet all those items? It actually meets all of them, except for two. And they are tax-deductible contributions, employer or matching funds, the first two. And because of you don't have those, you get other things. I added at the next slide, probably didn't notice. See that little asterisk I put on liquidity? I put that because in Kaizen, you need to give it some time before this thing works. So it's not liquid for the first while, but a lot more liquid than IRAs and 401ks. And on top of that, Kaizen adds some other stuff, not in a laundry list of investments. Death benefit, life insurance, income protection if disabled, long-term care or chronic illness benefits, pass tax-free to heirs or charity, and leverage. Leverage can help you grow things quicker. So here's the features of Kaizen other than the first two. The uses of Kaizen. The number one use is retirement income. We can give you more retirement income with less contribution than I think anywhere. Second big reason we use it is to transfer wealth to your kids and your grandchildren. Third reason is just plain old life insurance with the living benefits, the disability, long-term care. The reason is creditor protection. In this account, you're protecting these assets from creditors. You could do it for charitable giving. You could use it for equalized inheritance. There's a number of areas of personal and family use you can use it for. And there's business uses. You can have an employee retention plan using Kaizen. You can have fund to buy-sell agreement so that there's funds in the event of death that you have available to buy out the other partner. Or if neither one of you die, you're building up assets. So both of you have assets that you can buy out the other person if everyone wants to. Their business use is just key person insurance. When you have someone so important, if they leave, we're going to struggle for a while. And if we can't pay up for a good employee to replace them. So it's one strategy, the Kaizen strategy, with many applications, all designed to give you more security, more income, more impact. All those mores that Kaizen talks about. Well, is this right for you? Got to tell you a lot of details, but there's some qualifications. We don't sell it to under 18. We don't sell it to people over 65. You need to be in pretty good health, standard or better. You need to have a minimum income of $200,000 a year, and even the contribution level is on the lowest level, 20,000, and it goes up as a minimum level depending on your age. And there's the 15-year commitment. There's 5 years of 10 years of funding. We'll give you more details on that. And we need a few years of growth. So a 15-year commitment. Is it right for you? It isn't for everybody. So let's go over the features of why we use different things. Why are we using life insurance? There's 4 major reasons. 1, you're protecting your family. Day 1, you've got a death benefit. 2, living benefits. You have access to cash for illness, disability, long-term care, cancer, whatever, or accidents. That's a big deal in today's world. 3rd, tax advantages. The Revenue Act of 1913 is the Revenue Act that started income taxes in the United States. And from that first day, they wrote into the law that life insurance is, the death benefits are tax-free. And Internal Revenue Code, it grows tax-deferred as it grows. Then you can borrow from the policy tax-free. So it has this tax-free benefit. 4th, no advisory fee. You're not paying an advisor to manage this. There's no management fee either. These lower costs eventually actually overcomes all the insurance costs, making it as if the insurance, this whole thing was insurance free, not paying for insurance, just a growth product. So this is going to be kind of my summary page as we go through these 3 sections. So, and you see the other 2, legacy and living benefits, life insurance with strengthen your financial security. Tax-free growth minimizes estate tax exposure. No managed advisory fees, eliminates hidden costs. Those are some pretty powerful benefits. We're going to look at a person, 45 years old, male, and give you some numbers, give you a comparison how it looks. And the average person who buys Kaizen in the country is 46. And the average contribution per year is $70,000. This is, I went to 50,000 for a round number, and I went to 45 at middle of the decade there. So here's our hypothetical. Excellent health, non-smoker, good income. He has some saved for retirement already, and he's willing to put in 50,000 a year for 5 years. And he'd like distributions to start at 65 and to continue through 95. The NAIC is National Association of Insurance Commissioners, association of all the state life insurance commissioners, and they have regulations and what they're trying to control so it's a fair playing field for everybody. Anyway, that 6.81 is their declared rate as of today. I looked up new numbers and adjusted everything for this presentation. Very current. We're going to use income tax rate of 37%, the high. We're going to lose long-term capital gain rate of 20%, and the state income tax rate of a 5.5 for the average of the states. Let's get started with these hypotheticals. Here's a curtain call. I like that. So if you took 50,000 a year for 5 years, put it into a after-tax investment and got that 6.81, you could pull out 41,332 per year, starting at 65, and it lasts all the way through 95. I used every penny in that formula. 96, we don't have an income, but that'd be using that growth rate and that period of time. If we did it in an IRA or a 401k, it's 52,717, over 11,000, almost 11,500 higher, and higher income through 95. That is alchemy. IRAs and 401ks is creating a higher return out of the same investment return number. Excuse me. That's alchemy. All that blank spot below, we're going to fill all that in as a comparison, but I want to give you this feel for what that 50,000 a year for 5 years would do in a regular world. Okay, we've covered life insurance. Let's talk about the growth strategy. A little bit of life insurance evolution. Way back in 1761, term life came about. And almost 100 years later, whole life came about in 1842. And then something came out in 1997, fairly young. An index universal life gives you growth and protection. That is the policy type we're going to use. I'll show you why. What you get in an index universal life, you get growth with protection, market gains with no downside. No downside. You are capped in a capped funds or you are in a participation apply, but the big deal is here, market gains with no downside. The indexes have some controls on them. Some of them are capped. So here's the maximum we'll let you make, and that's how based on their options. And some have a participation rate on the index. Whatever you go, this is very turnkey. Minimal management. Most policies, you only change your allocation on your anniversary date once a year. Not much. Don't have to worry about doing stock trading. More safe and secure. Leave it alone. Now, here's something you need to understand. How do they make it so there's no downside? So, in a 5% interest rate world, and they have $1,000 beyond the cost of insurance, They put $952 in the general fund of the life insurance company. This is a fund of high-grade bonds, a big, giant pool. And then they, in the 5% world, they have $48 available to go out and buy options to replicate those indexes we're referring to. But if things go down, that $48 expires, the option expires with zero value, but your 952 grew to 1,000 in 1 year. So that's how come we can guarantee with no downside. We're not allowing you to lose money. Here's the same in a 15% economy. Notice we have $130 available for options. In a higher interest rate environment, we can buy more in the market, which helps us a lot as things recover. So, growth and protection. Index options, capped. A cap usually might be 11.5, 9.5, 12, something. And participation rate funds. And the participation rate are more conservative funds, and they're currently paying up to 240% of that performance. Meaning if it averaged 5 over the last year, you would get about 12.5 or something. You get participation rate, and again, minimal design. So there's the growth. I don't spend a lot of time there, but market returns with no downside, and a good strategy. So we've covered life insurance and growth. Let's handle leverage. You're going to think I'm leaving the topic a little bit here. Mortgages. Before 1934, mortgages required 1/2 down and 1/2 repaid in 5 years. Wow. But in 1934, the FHA created the 30-year loan, revolutionizing the home buying. And none of you were buying homes with 1/2 down and 1/2 in 5 years. Commercial, they do that. But on your home mortgage, much more smoother ride. But you're using leverage to get these things to work. And there's lots, it's improved. The 30-year mortgage has helped a lot of people get into a home. So how do we use leverage? We use it for buying a home. Common, very common. We do it for real estate investments. We do it for business investments. We use it for education. Those are positive, good reasons to use leverage. And we also use it for some bad reasons. Paying for a car that's going down in value day one. For health care, that we don't have a supplement plan or whatever. And for daily essentials, orange juice or whatever, credit cards, all this world, and major life events. I really want to do that round the world thing, and we're willing to put it on credit. Those are the negative things. There's positive reason for leverage. The green, there's negative. So back in September of 24, Barbara and I went down on a trip to Cabo, and we hired this photographer to follow us around on this beautiful beach and take pictures. And we had a lot of them, but those are some of the best. What are we talking about vacations for? Why are we not using leverage for retirement? I don't know a reason why not, but that's what we're doing here. We think it's a 5th good reason to use leverage for your retirement planning, to have more money in retirement because you're using other people's money. Okay, strategic leverage. 2 to 3 times the range. Bank funds 50% to 75% with no, well, I need to say that a little differently. With no collateral or loan payments. 5 annual payments on yourself. That's it. Bank is going to do 10 payments, but you're just doing 5. We set up in a trust ownership, which provides protection and creditor protection. It also gives us this entity to set up the borrowing. And we have a bunch of things we tweak to make this thing work. Not going to go into the details of that, but I want you to understand the range of borrowing and the 5 payments and the trust ownership. These build and design writers, there's a bunch of them. I wanted to show them to you, but we're not going to explain any of these things tonight. Here's how Kaizen visually works. You have 5 payments, 5 annual payments. We actually have one vendor, Allianz. We can set up a monthly plan for 5 years. So 5 years of the silver pigs. While you're making that contribution, the bank is putting in approximately the same amount as you are for the first 5 years. Then when you're through, they continue their payment that they're making before, and they add what you were putting in. So it visually almost looks like 3 to 1, but it's not always quite 3 to 1. That's the borrowing. And we're doing this with no credit checks, no loan documents, no personal guarantees, no signature on some loan, no collateral. You don't have to put up your first child. You don't have to, there's not a loan that you're making. I'd like to show you how Kaizen is performed. The very first policy was issued in 2012 to one of the founders, and she shares her annual statement with us. I actually checked yesterday to see if she had the June 26th of 2025 posted, but she hasn't. But she has the 2024. So we're going to show you off of her statement what her numbers are. Her average return from 2012 through 2025 now is 7.73. And during that time, my guess is the average stock investor did about 7. The index probably did about 10, but investors have management fees, they have advisory fees, and they're not good in their timing methods. So they're usually about 30% less than what the index are following. That's why I got the 7. So the 7.73 is very competitive. And then the average interest this first person played over 2012 was 3.81. If you subtract that from the 7.73, we call that the spread. The spread of how much you're making on other people's money. A portion you're making is 7.73, and then 3/4 of it you're making the 3.92 because you're paying interest on this asset that can't go down. And this is really exciting for me. NIW did some back testing to 1930, and there has never been a 15-year period of time with less than a 2% spread. So if I can feel comfortable that I'll get a 2% up to 3.92, I'd be perfectly happy in that little range. They did a 15-year spread. There are negative years, but not over a 15-year period of time. Gives it more gives you a truer average. Here's a visual on the trust. Every individual has their own policy, and we set up a trust for them. And then these all go into a master trust that the custodian, the trustee, then arranges the loan. Do banks like this kind of loan? It's the best. They love it because there's no downside. Okay, a curtain call, and we got a snare drum. So the drum roll, please. I'm going to show you how Kaizen is performed in this comparison chart from for this person 65. I think it went up another 10,000 to 62 or 72,000 or 82,000, 92,000. Am I starting to dream too much? Here it is. It went up to 100,000. More than double the after-tax investment. Same return. Same return. It's as if you got life insurance free with all these benefits. And the tax-deferred account almost double. 3,100,000 total from 65 to 95. And guess what? It's not all gone at 95. We had initial death benefit from day one that the other two didn't have, 1,438,000. Then we also have a death bill. I probably need to check that 90 up there of 1,299,000. So you still have additional death benefit, and you're 95. Looks good. Well, sometimes things are not so good. Two terrible times in our economy one was the Great Depression in the 30s, and the other one is the high interest rate of the 80s. So in the Great Depression, from 30 to 32, the market lost 70% of its value and did not recover the losses until 1959. Whew. So what we've done, Great Depression simulation, we put in 9 years of zero over a 12-year period of time. Wow. We're going to see how this worked. Then in the 1980s, interest rates got up to 16.88%. And so NIW simulated those kind of interest rates and to see how it worked. I wouldn't be showing you, as you know, but it worked. Here's the numbers. In the 1980 stress test, your income would have been 75, still almost double the after tax. And during the Great Depression, 65, over that 10,000 more than the tax deferred. So even in the downtime, it's going to be competitive because of the features it has. And I did one more number here. Allianz, one of the companies we use, they wanted to test NIW software that crunched all these numbers. We want to test this to see if they're lying. And they did their crunching tests, sat on everything, and came back and said, not bad, they're doing okay. In fact, if anything, they're a little too conservative. They think there's an 80% chance that a 100% income person will be able to take over this loan and have tax-free income. Wow, that's amazing. So we filled out the rest of the sheet. Banking cuts capital outlay. Now, you have to put his money in. Prevents payment fatigue, only 5 payments. Reduces liability risk, that creditor protection. Turnkey, reduced complexity. It's not that exciting, really. And liquidity and flexibility, you have good liquidity after the 15 years. So you don't have the RMD and those problems. There's a lot of features and benefits here. So in the investment world, they have a 7-point risk matrix. And I've shown you the top and the bottom. So the lowest we have risk-free is FDIC insured savings. Too low risk is government bonds. Then at the other extreme, extreme 7, extreme risk is crypto, option trading, and startups. High risk, private equity, speculative stocks. Wow. Where does Kaizen fit? 3, 4, or 5? We're right in the middle. What do you think? Well, here it is. Woo, forgot that. Just moderate to low. It's the same risk as high quality corporate bonds or annuities. Very low risk. That's exciting. We've created 2 landing pages that have a ton of information. And with that QR code, you can go to this landing page. You've got videos, you've got chapters, you've got question and answer section. You've got everything at your fingertips in understandable English to show you how this works. It's exciting. It'll take some time to go through this site. There's a lot there, but if you do, you'll get excited that you want to have a Kaizen policy. There's the QR code to get there. They have another one. This is still using Kaizen, but they're using it to gift to grandchildren or children. So the same thing, same situation. And here, well, let me show you. Oh, I forgot. All right, I'll go back. I don't have a QR code. That QR code is also on a business card. If you're interested in this gifting mode, just text me or email me, and I'll send you the link for this. Very helpful. I also have a website. I think it's terrific. It has a lot of content, it has a lot of links. It has a retirement income calculator that I built. This is easy to do. Just follow along through those questions and I'll show you how much you're short for retirement, your retirement gap. And we have a more complex version for the person who wants complex answers and not majorly different input. You'll enjoy both. So that's it. There's the QR code again for you to take down if you'd like to go to that landing page. I appreciate everyone who's attended today. If you have individual questions, you can text them to me, you can email, you can call, whatever you prefer. I'm happy to help. Have a great afternoon. And well, it's getting close to the weekend. Have a great weekend. Bye.